Welcome to this video on decentralized finance, or DeFi. Over the past few years, DeFi has emerged as one of the most exciting and rapidly evolving areas in the world of blockchain and cryptocurrencies. DeFi promises to revolutionize the way we think about and interact with financial services, offering a decentralized, transparent, and more inclusive alternative to traditional financial systems. In this video, we will take a deep dive into what DeFi is, how it works, and why it's important. So sit back, relax, and let's explore the world of DeFi. Next, the outline of today's video is as follows. We will explore how DeFi works, the benefits of DeFi, popular DeFi applications, the risks and challenges of DeFi, the future of DeFi, and conclude with our final thoughts. Next, we will discuss what DeFi is, its brief history, and its importance. Decentralized finance, or DeFi, is a new paradigm in the world of finance that is built on decentralized, peer-to-peer networks. It allows for financial transactions to take place without the need for intermediaries such as banks or other financial institutions. The concept of DeFi is not new, but its popularity has increased in recent years. In 2008, Bitcoin was introduced as a decentralized digital currency. It paved the way for the development of other blockchain-based cryptocurrencies, which eventually led to the creation of decentralized exchanges, lending platforms, and other financial services. Now, let's take a brief look at the history of DeFi. DeFi is a relatively new development in the blockchain space, with the first DeFi application launching on the Ethereum blockchain in 2017. Since then, the DeFi ecosystem has exploded, with new applications and projects being launched almost every day. As of early 2023, the DeFi market has a total value locked (TVL) of over $150 billion, according to DeFi Pulse. So, why is DeFi so important? There are several key reasons. First and foremost, DeFi's goal is to offer inclusive and transparent finance to anyone with internet access, including underserved populations. Secondly, DeFi is designed to be more secure and transparent than traditional financial systems. By operating on a decentralized blockchain platform, DeFi eliminates the need for intermediaries, reducing the risk of fraud or corruption. Smart contracts also ensure that transactions are executed automatically without the need for human intervention. Finally, DeFi is often associated with lower fees and faster transaction times compared to traditional financial systems. Because there are no intermediaries involved, transactions can be completed more quickly and with lower fees. Next, we will be discussing how DeFi works, the technology behind it, and the role of smart contracts in DeFi. So, let's get started. DeFi is a revolutionary concept that is changing the way we think about finance. It is a decentralized financial system that is built on blockchain technology. Blockchain technology is a decentralized ledger that records transactions on a peer-to-peer network. Each block in the chain contains a cryptographic hash of the previous block, a timestamp, and transaction data. This technology is tamper-proof, transparent, and secure. DeFi is different from traditional finance because it is decentralized. In traditional finance, financial institutions such as banks and governments have centralized control over the financial system. DeFi, on the other hand, is decentralized, meaning that it operates on a peer-to-peer network with no central authority. The main advantage of a decentralized system is that it eliminates the need for intermediaries, which reduces transaction costs and increases transparency. Additionally, Decentralized systems are more resilient to attacks as there is no central point of failure. Smart contracts are an integral part of DeFi. They are self-executing contracts that are stored on the blockchain. Smart contracts are programmed to automatically execute when certain conditions are met. For example, a smart contract can be programmed to automatically execute a payment when a certain event occurs. In DeFi, smart contracts are used to automate financial transactions. For example, a smart contract can be programmed to automatically execute a loan when certain conditions are met. This eliminates the need for intermediaries, such as banks, which reduces transaction costs and increases efficiency. In summary, DeFi is a revolutionary concept that is changing the way we think about finance. It is a decentralized financial system that is built on blockchain technology. It eliminates the need for intermediaries, reduces transaction costs, and increases transparency. Smart contracts are an integral part of DeFi and are used to automate financial transactions. Next, we will be discussing the benefits of decentralized finance or DeFi. DeFi is a rapidly growing industry that is changing the way we think about finance. In this part, we will be highlighting some of the key benefits of DeFi. The first benefit of DeFi is accessibility and inclusivity. Unlike traditional finance, DeFi is open to anyone with an internet connection, regardless of their location or background. This means that people who were previously excluded from the traditional financial system can now participate in financial activities like lending, borrowing, and trading. The second benefit of DeFi is transparency and security. DeFi platforms are built on blockchain technology, which means that every transaction is recorded and cannot be altered. This level of transparency ensures that everyone can see what is happening on the platform and prevents fraud and other malicious activities. The third benefit of DeFi is lower fees and faster transactions. Unlike traditional finance, DeFi platforms do not require intermediaries like banks, which means that transactions can be completed quickly and with lower fees. This makes DeFi an attractive option for people who want to save money on transaction fees. The final benefit of DeFi is the absence of intermediaries. DeFi platforms are built on peer-to-peer networks, which means that transactions are completed directly between users. This eliminates the need for intermediaries like banks, which can often slow down the transaction process and add unnecessary costs. In summary, DeFi offers a range of benefits that are not available in traditional finance. It is accessible and inclusive, transparent and secure, and offers lower fees and faster transactions. The absence of intermediaries also makes it a more efficient and cost-effective option. Next, we will be discussing some of the most popular DeFi applications in the market. Decentralized finance, also known as DeFi, has revolutionized the traditional financial system by offering a transparent, decentralized, and trustless alternative. Let's start with the most popular DeFi application, which is decentralized exchanges or DEX for short. These platforms enable users to trade cryptocurrencies without the need for intermediaries, such as banks or financial institutions. Some of the most popular DEX in the market include Uniswap, SushiSwap, and PancakeSwap. These platforms provide a secure and transparent way for users to trade cryptocurrencies and earn rewards through liquidity provision. Moving on to the next DeFi application, we have lending and borrowing platforms. These platforms allow users to lend their cryptocurrencies and earn interest or borrow cryptocurrencies by putting up collateral. Some of the most popular lending platforms include Aave, Compound, and MakerDAO. These platforms provide users with a way to earn passive income or access liquidity without the need for a central authority. Another popular DeFi application is yield farming. This is a process where users can earn rewards by staking their cryptocurrencies in liquidity pools on various DeFi platforms. Yield farming platforms offer higher returns than traditional financial products and provide users with a way to earn passive income. Some of the most popular yield farming platforms include Yearn Finance, Curve Finance, and Harvest Finance. Lastly, we have stablecoins, which are cryptocurrencies that are pegged to a stable asset, such as the US dollar. Stablecoins provide users with a way to mitigate volatility in the cryptocurrency market and provide a stable store of value. Some of the most popular stablecoins in the market include USDT, USDC, and DAI. Next, we will discuss risks and challenges of DeFi. Decentralized finance, or DeFi, has gained popularity in recent years as an alternative to traditional financial systems. However, DeFi also comes with its own set of risks and challenges that users should be aware of. In this video, we will explore some of these risks and challenges and how they can impact your DeFi investments. One of the most significant risks associated with DeFi is smart contract vulnerabilities. Smart contracts are self-executing contracts that operate on a blockchain. They are designed to automate transactions and eliminate the need for intermediaries. However, smart contracts are only as secure as the code they are built on. Any vulnerabilities in the code can be exploited by hackers, leading to significant losses. Another significant risk associated with DeFi is market volatility. DeFi operates on a decentralized platform, which means that prices can fluctuate wildly due to changes in supply and demand. Unlike traditional markets, there are no circuit breakers or regulatory bodies to stabilize prices during times of extreme volatility. This means that DeFi investors must be prepared to weather significant price swings. Another risk associated with DeFi is the lack of regulation. DeFi operates outside of traditional financial systems, which means that there are no laws or regulations to protect investors. This lack of regulation can make DeFi investments riskier than traditional investments. Investors should conduct thorough research before investing in any DeFi project. Finally, user error is also a significant risk associated with DeFi. DeFi transactions are irreversible, which means that if you make a mistake, there is no way to undo it. This could result in the loss of funds or assets. Investors must be extremely careful when entering addresses and double-check all transactions before submitting them. In summary, DeFi can be a lucrative investment opportunity, but it also comes with its own set of risks and challenges. Investors must be aware of these risks and take steps to mitigate them. Conducting thorough research, double-checking transactions, and diversifying your investments are all important steps to take when investing in DeFi. Next, we will discuss Future of DeFi. Decentralized finance, or DeFi, is the new buzzword in the world of finance. It's an innovative approach to traditional finance, offering a more open and accessible financial system. But what does the future of DeFi look like? Let's take a closer look. First up, the potential for mainstream adoption. DeFi has the potential to revolutionize the way we think about finance. By removing intermediaries, DeFi can offer cheaper and faster transactions, greater transparency, and more control over our financial lives. As more people become aware of the benefits of DeFi, we can expect to see a surge in mainstream adoption. Already, the DeFi space is growing rapidly, with billions of dollars locked in DeFi protocols. Next, we have integration with traditional finance. While DeFi has the potential to replace traditional finance, it's more likely that the two will coexist, with DeFi integrating into traditional finance to offer better services to customers. This integration will likely happen in a number of ways, from the adoption of DeFi protocols by traditional financial institutions to the development of hybrid platforms that combine the best of both worlds. Finally, we have advances in DeFi technology. DeFi is still a relatively new space, and we can expect to see many new innovations in the coming years. From more efficient and secure smart contracts to the integration of artificial intelligence and machine learning, DeFi has the potential to transform the financial landscape as we know it. The future of DeFi is bright, and we can expect to see continued growth and innovation in this exciting space. As more people become aware of the benefits of DeFi, we can look forward to a more accessible and inclusive financial system for all. Finally, we are going to conclude our discussion on decentralized finance or DeFi. We have covered a lot of ground in our previous videos, so let's recap some of the key points. DeFi is a blockchain-based financial system that operates without intermediaries, such as banks. It provides users with more control and autonomy over their financial transactions, enabling them to borrow, lend, trade, and invest in various assets. DeFi platforms are also more accessible, affordable, and transparent than traditional financial services. DeFi has grown rapidly in recent years, with billions of dollars worth of assets locked in various protocols. The potential benefits of DeFi are vast, including financial inclusion, innovation, and decentralization. However, it's not without its risks. As with any emerging technology or financial system, DeFi has its fair share of risks and challenges. These include security vulnerabilities, smart contract risks, regulatory uncertainty, and market volatility. Therefore, we urge you to invest in DeFi cautiously and with awareness of the risks. Now, we want to encourage you to learn more about DeFi and its potential benefits and risks. We have provided some links to useful resources in the video description, so be sure to check them out. You can also join various DeFi communities, forums, and social media platforms to stay informed and engaged. In conclusion, DeFi is a fascinating and promising technology that could transform the financial industry. However, it's still in its early stages and requires careful consideration and scrutiny. We hope this video has been informative and helpful. Thanks for watching, and we will see you in the next one.